Hello traders, Gary Wagner here. It is 12:02 in Honolulu, 6:02 in New York on Wednesday, 17th day of May 2023, and this is the Daily Report for Gold and Silver. Market participants continue to focus on recent statements by Federal Reserve officials suggesting that the resolve remains strong in terms of keeping interest rates elevated and maintaining those elevated rates without a rate cut throughout 2023, rather than focusing upon the real possibility that the government might run out of money and not be able to meet their obligations and the fallout that could follow from that cataclysmic event. The net result of focusing on the now rather than the future is that we have seen gold lose about 5% in value from its high on May 4th to today's low. Although not as severe as yesterday's $20 drop, gold prices continued to decline today, currently down $7.30, with the most active June contract fixed at $1,985.70. The dollar was a major contributor, with dollar strength resulting in a net gain of 0.32% to the dollar index, taking the index to 102.73. Lastly, silver gained roughly 0.2%, with the most active July contract currently fixed at $23.92.5. Traders, we are looking at a daily candlestick chart of the continuous contract of gold futures. We do have the 50-day moving average up, as well as a Fibonacci retracement set. The retracement set begins at 1811 up to the high that occurred on May 4th of about 2,085. And we can see that we have had a tremendous sell-off from these highs back on May 4th to the low that was achieved today when gold traded below $1,980. And what that resulted in is that for the first time since March of this year, we saw gold actually break and close below its 50-day moving average, which is a primary technical tool that market technicians use to determine whether a market, a stock or commodity, is in a short-term uptrend, downtrend, or trading sideways. As you can see, that right around the middle of March, we had the first break above the 50-day moving average, and gold traded above its 50-day moving average up until today. And traders, that is absolutely significant. When we figure the differential between the high of May 4th, which is 2,085, to the low today of $1,978, that's a $107 differential, or about a 5% drop in value. The recent drop in gold prices can be directly related to statements and the hawkish demeanor of the Federal Reserve, which has been highly supportive of the dollar, as well as challenging market participants to be active sellers of gold. We are looking at a daily chart of the dollar. We can see that back towards the end of March, the dollar broke below its 50-day moving average, and as recently as Friday, closed back above that. This is Monday, Tuesday, and of course today's pricing. The interesting thing about the dollar is when we look at the low that occurred on May 4th, when the dollar was trading at about 100.50, up to this recent top at 102.95, what we see is that the dollar has increased in value in a time span of under 2 weeks of 2.38%. It highlights what my opening statement was, and that is, rightfully so, market participants are focusing on the now and not what could happen in the future. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.